Welcome back to another weekly technical analysis. This week, as I promised, I'm going to be doing things a little bit different. So much of the volatility on SPY has died down. It's become really difficult to make meaningful scalp or swing plays on SPY. So although I will be going into that technical analysis a little bit, I figured what I could give you guys this week is actually a little bit of content about how traders find plays in times of desperation. We're going to be going into biopharma catalysts, how to find good plays on gap and crap stocks, stock market rumors, all of that. So let's get into it. As I mentioned in my previous technical analysis, SPY's volume and volatility has been declining consistently for the past 3 weeks. This, in conjunction with rallies in markets that typically inverse SPY, like gold and TLT, means something strange is up. And that something strange is UUP, up. UUP, which more or less tracks the strength of the US dollar, has been slowly dying since the beginning of the coronavirus pandemic. Why? Well, the Fed just keeps printing. Unfortunately, what this means for us is the days of really nice, clean swing trades on big ETFs like SPY are over. So what, you're probably asking, do we do? Do we sit and do nothing? No, we're traders, so we always have to find ways to make money in the market. It's what we do. So let's get into what we can do while SPY is doing nothing. Now, if you're ever curious what traders did before the coronavirus pandemic, it's this. Get ready for it. We scour the entire market like crack addicts, looking for any dose of volatility we can get. So this is always where we start off, in earnings. And this is earnings for the week of August 17th, 2020. So essentially what we're going to do here is look through this chart, which is published by Earnings Whisper every week. You can follow them on Twitter at eWhispers. Now, essentially all we're doing is looking for companies that we are maybe more familiar with. You typically want to stay away from trading companies you don't know anything about. The odds of them being some gap and crap quagmire you'll get your money stuck in for years is just a little bit too high. So this week, Tuesday, it looks like we have Walmart, which is good. We know a little bit about Walmart. Kohl's, which I could trade or I could stay away from. I really don't know how retail is going to be affected by the coronavirus pandemic. It seems to me, just from anecdotal experience, retail has been performing surprisingly well. On Wednesday, we have Target, we have Lowe's, and we have NVIDIA. NVIDIA is a really fun, high volatility company to play. So we'll definitely be looking into NVIDIA. Thursday, I don't see anything that really tickles my fancy. Ross, more retail. Alibaba is kind of exciting. With the perpetual back and forth between Trump and China regarding the trade war, Alibaba has huge potential for being extremely volatile, which of course makes it a darling for traders like us. When we go about evaluating earnings, trying to figure out what kind of plays we can make, the first thing we're going to do is check out Benzinga. Right now I'm using Benzinga Pro. There's a referral link down below if you decide you like Benzinga and you want to try it for yourself. I do highly recommend it. The Squawk Box is pretty awesome if you're a day trader. What we're looking for is essentially how often they outperform their earnings projections, how much they do it by, what the surprise tends to be, and then after that we're going to look up how they typically perform one day after their earnings, when they have good earnings or when they have bad earnings. So the first one we said we were going to look at was Walmart. You can see here, Walmart tends to be a pretty mixed bag. Over here is our surprise percentage. This is our surprise percent on the earnings per share. Walmart tends to beat their EPS. When it comes to their revenue, it looks like they beat their revenue projections about as often as they don't. So Walmart could be a little tricky. Now, all right, let's swap over to the next step here. Okay, so checking earningsstats.com, it looks like Walmart beats just about as often as they don't. They beat about 55% of the time. So that's not super impressive. That's not something to write home about. So the right move here will be one where we don't really give a shit directionally what happens to Walmart. Let's see, on their last earnings, which was in the midst of coronavirus, they only beat their earnings per share by about 0.85%. So this is looking more like we want to sell an iron condor. This doesn't look like we want a huge directional play on Walmart. All right, next one. Quick enough. Yeah, so doing some quick TA on previous Walmart earnings, Walmart is a weird one. Whether they have positive surprise, as in they beat their earnings, or negative surprise, as in they didn't beat their earnings, Walmart almost always just dumps after earnings for some reason. We can see their last earnings, May 19th. They beat by 5% and still dumped. And if you go even farther back in Walmart's history, it's the same story pretty much over and over and over and over again. In fact, there's only one earnings in the last 2 years where they beat and they actually did what you'd expect a company to do when they beat. So there's almost no way I'm going long or buying calls on Walmart. This is likely going to be a call credit spread scenario. If I want, I might do a very wide iron condor. All right, now like I said, it's time to up the tempo. We're looking at NVIDIA here on Benzinga Pro. NVIDIA is pretty decisively beating their earnings almost every quarter. In fact, going back on Benzinga Pro, I really only see one time where they didn't beat their earnings. So as to what to expect here, I think it's pretty obvious. We're going to expect them to beat their earnings. And according to earningsstats.com, 64% of the time post-earnings, NVIDIA moved up. So we have a pretty strong argument here for a put credit spread, or just a call could work here too. And now doing some quick technical analysis, it pretty much confirms what we looked at on earningsstats.com. NVIDIA does have the tendency to spike post earnings, but you do have to be careful. You can't just hold for forever afterwards, because it looks like it spikes. It does a run up prior to earnings, spikes afterwards, and then has the tendency to dump for a couple weeks after that. And then once it gets back down to its median price, it just has continued this run up that it's been on for years. So this is a pretty obvious call or put credit spread. I think I'm probably just going to go with a call here. Since a put credit spread, I'm going to have to hold till expiration. And like I said, NVIDIA does have the tendency to dump after an anticipatory run up to earnings. Now, finally, Alibaba, probably one of my personal favorites. Alibaba has the tendency to just about always beat their earnings. And not only beat their earnings, but they have the tendency to wreck their earnings. For example, last earnings, they beat their expected earnings per share by almost 50%. Now, for a company of Alibaba's size, that is huge. This, in addition to Alibaba being added to the Hang Seng Index, will create a huge tailwind for Alibaba. Now, when we look at earningsstats.com, we see a very similar pattern as to what we saw with NVIDIA. Alibaba tends to run up after earnings about 65% of the time. However, looking at the chart, there is cause for caution, because a lot of traders just assume at this point Alibaba is going to beat. The anticipatory run-ups for Alibaba get pretty big. But the good news is they tend not to dump until a few days after earnings. So what we can do here is we can do a call that runs up to earnings and just sell off prior to earnings, or we can do a put credit spread, which is a little bit riskier, because like I said, Alibaba does have the tendency to dump after earnings, even though it beats, just because the anticipatory run-ups are so huge. All right, now the last two companies I think we need to talk about are Micron Technologies and Boeing. MUNBA. Micron Technologies has been on my watch list since I started trading, because it tends to oscillate so reliably between overbought and oversold with price action to match. In fact, you could probably program a bot to just buy when MU is oversold, and it would make money almost every time. Well, here's the news. MU has just hit oversold territory again. Now, don't just randomly buy in, because that's how you lose money. There's an old adage in trading that patterns repeat themselves until they don't. Well, we need confirmation first. So I'll tell you, I will be watching MU this week, and as soon as I see a couple green bars in a row, I will be buying in. Now, Boeing is a company that was extremely strong before the coronavirus pandemic, boasting a ticker price somewhere around $350 and then plummeting to as low as 89 post-coronavirus. Now, it's seen somewhat of a recovery up to 178 once again, but is nowhere near the levels tech companies like Microsoft and Apple have found themselves, despite very similar capitulations. Now, its slow recovery probably has a lot to do with a lot of canceled contracts due to airlines just not operating at the capacity they were in pre-COVID levels yet. But this slow rise up gives traders an opportunity to capitalize on one of the few remaining recovery opportunities available. Now, I'm not saying jump right into Boeing right now, but I am keeping it on my watch list, as there have been rumors of a potential coronavirus vaccine in the near future. In addition, the US government has shown overwhelming commitment to keeping Boeing afloat through bailouts and quantitative easing measures. So although it's impossible to time when Boeing will see a Microsoft or Apple style recovery, we can almost certainly say that eventually they will, which makes BA worthy of being on your watch list. So to summarize, the plays we're looking at this week are mostly earnings plays. We don't really have a lot in the biopharm catalyst department. The tickers specifically that I will be looking at will be Walmart, Alibaba, and Nvidia. Alibaba and Nvidia, I'm expecting to be pretty clean upward movements, and I'm looking to enter a call prior to earnings, and I will either be selling the day of earnings or just before earnings, because there is a little bit of uncertainty that comes post earnings with this company. Now, the little bit more complicated one is Walmart, because Walmart just likes to dump no matter what. So we might be doing something more theta weighted, like call credit spread on something like that. Also, very wide iron condor makes a little sense if you want a little bit less directional exposure. In addition to that, I will be watching Micron Technologies very closely and Boeing also very closely. Now, if you want to know specifically when I enter, you can follow me on Twitter at CatsMeowTrading, and I will call out pretty much the exact moment when I buy into Micron Technologies or Boeing. Now, in the hunt for volatility, that's all I have for you today. There will probably be other ones I'll be looking at throughout the week. You always have to keep your eyes open for opportunity in the markets. This is what we do. We just scour the market for volatility and try to find plays. Thanks for watching. Make sure to leave a like if I made you some money. Leave a comment if you think I have a better play and we can talk about it. As always, if you want to talk to me or learn more about evaluating earnings, there's a guy in the Options University community who's a million times better at it than I am, named Earnings Earl. You can drop in the Discord and talk to him directly. He also posts all his plays. He's fantastic at earnings. Now, if you like the charts I use Webull. I've left a referral link down below. I can't recommend them enough. I've really liked Webull. Now, if you want to give Benzinga Pro a shot, I really have been loving their Squawk box. It's super convenient for me as a day trader to just have the news read to me all the time instead of having to scrape through it on Yahoo Finance or something like that. They're also really quick about publishing it too. So you can actually get actionable news before it hits the market at launch. Finally, if you want to do this full time, I recommend checking out Flow Algo for options alerts. You can check out another referral link for them down below. Thanks for watching, guys. I'll be back with a similar video next week. Take care, guys. Until next week.